Good morning, everyone. Good afternoon. Have a wonderful new week. So I know not a lot of us will be here today, but I thought, what the heck, we can have a morning edge, give some make the bias chart as we would regularly do, as Blake would regularly do, and have a look at a few things. Clearly not a lot of things have moved today and yesterday night. Expectedly, obviously, since it's not that we had some kind of a surprise news coming. So I'm expecting the market to go back to normality, obviously, tomorrow, perhaps even tonight, having to do with Asian markets. Tonight's Asian market should be back to normal. And then tomorrow should be a normal day. And let's see if that's going to provide any follow through to Friday's data. Let's see if we're going to have any follow through response to Friday's data, which, as you all know, were weak, as we discussed on Friday, weaker than the market would have wished for, because I think the market wishes for somewhat weak data that would keep the Fed, as far away from tapering as possible. I've explained multiple times in the past why I think this is a misconception in any case. I think the market is still oblivious to the fact that the Fed is not really willing to do much. So the market is still reacting, strongly to whatever data we have, despite the Fed not being willing to actually do something about data. They say they are, but in my opinion, they aren't. In any case, what is significant to note having to do with movements, and then we're going to do the bias chart. Speaking of the bias chart, let me also bring the 4-hour charts here, because that's what we're going to use for the bias chart. So the euro, definitely an important currency pair, not only because it's the most liquid FX pair out there, but also because it's the biggest component of the DXY, right? So we did find resistance on Friday in this confluence of the 38.2 from the high to the low, and previous high over there. Now, in my opinion, most likely this has already broken out, as we noted when we broke through this wedge. So in my opinion, there is the bigger chances that this is a temporary stall at this level, and not some kind of a major resistance level that's going to turn EURNZD lower for lower lows. Not impossible, but in my opinion, as I said, the highest probability is that we're temporarily stalling here before we push even higher, with the 200 daily moving average at the nice psychological rounded level of 120 being the next interesting upside target, if you want my opinion about it. So this is definitely, one thing that is in my radar. The other one is the cable, because the cable broke out on Friday. Didn't have, much of a follow through. It initially showed quite a lot of strength, pulled back, pared back like 2/3 of its gains, but still closed above this channel trend line resistance. Today we seem to be more or less consolidating again above this. So I would ideally want to see some follow through before I can before I can be convinced that this is a solid, valid, legitimate breakout and not some kind of a false move. Now, commodity currencies have not had such issues because, we're seeing a lot more momentum behind them. Here's the Aussie, here's the Kiwi. You can clearly see, right, a lot more strength here. The reason I didn't stick so much on the Aussie chart, and I'm pausing here on the Kiwi chart, is because Kiwi seems to be at a major pivot area. On the daily chart, you can see that this whole move lower, defined by this channel depicted in green. It's the area we tested on Friday. We tested it again today. 72 cents, just a few pips above, is the 61.8. We also have a horizontal support resistance area. So bottom line, key pivot area for the Kiwi. Now, understandably, after quite a big move higher for recent FX standards, that is, we might see this confluence of resistances provide, some kind of a ceiling to the market, but I think it's going to be temporary. I think we're eventually breaking out and going much higher in the Kiwi as in the Aussie. But clearly buying, if you didn't buy it earlier, I mean, clearly buying it now that it's testing a confluence of resistances doesn't make much sense. So as I said, I do think we're breaking out, but it might take a few days, worst case scenario. So I wouldn't be chasing it up here. You'd be better buying the breakout than buying it exactly where we are now. At the same time, momentum is not amazing in any way, shape or form, but my cat is really excited about all that. But the gold market has most likely broken higher, right? I was monitoring this channel, passing from like 3-4 points having to do 4 points having to do with resistance, 2 points having to do with support. So it's not a bad channel, technically speaking. I mean, it's not an arbitrary type of channel. We broke through it. We're currently testing the 61.8. So I see no reason why somebody would want to be short. And silver followed through with a little bit of a delay on Friday. We had quite a nice candlestick on Friday, decisively showing that we can close above the channel, and against especially the bigger symmetrical triangles trendline support, which has currently moved slightly higher from the 23 mark area. I do think that there is no reason for anybody to be bearish silver as well. Now, crude oil, I remind you, as you see, somewhat similar to the Kiwi, right? Corrective move lower, well defined in a channel, currently testing a pivot area, confluence of resistances. So it's trying to make the move, hasn't done so yet. But on the other hand, notice that the fact that we haven't managed to penetrate through this trendline resistance for 3 consecutive days counting today hasn't really turned the market lower either, right? So the market seems to have a decent amount of underlying strength, so I wouldn't be betting against it, I can tell you that much. I'm pretty convinced that crude oil is headed much higher. Now, I can't discredit the probability of prolonging a little bit more the corrective move, but I do think that eventually we're breaking higher, if it's not imminently. Might take a little bit more time if we get rejected from here, but I do think we're breaking higher and we're headed for levels above 80, and perhaps surprisingly higher than 80. Anyhow, one step at a time here. So since we don't have Blake today with us, I have the luxury of doing things in reverse, meaning I'm giving some of the remarks I have about the market, and then we're going to go into the bias chart and complete it, right? And then we can go over questions. Let me remember what else. Yes, there is one thing I hadn't addressed for quite a few days. I kept forgetting to do so during the last couple of days of the week. Of course, I did, as almost always, do the end of week analysis. So of course, my commentary is there. But I wanted to talk about the crosses, because I already mentioned the obvious strength we have in commodity currencies. So it's not a bad idea to have a look at some of the crosses that, in my opinion, are looking very, very interesting. And I'm talking about the Euro-Aussie, Euro-Kiwi, Pound-Aussie, Pound-Kiwi crosses. I've been saying for a long period of time that I do think that their rebounds are corrective in nature. They've been unfolding as such in a very, very clear way. Now, it's not impossible for a market to start an impulsive move higher with, the initial move having deceptively corrective characteristics. It's not that I haven't seen it in the past. But, from my observation and statistically speaking, I still think that this is not the likelihood of what's happening here. I think that more likely what's happening here is that we've had corrective moves higher, and there is a very decent chance that we've already seen the high. In the case of the Euro-Aussie, I had to redraw this channel a couple of times as we were moving to the upside. And I have to tell you, I was looking at it yesterday while I was doing analysis, and I was realizing that if you really want, you can redraw it even a third time. I'll do it here. And give it a different color. And that would be it. Right? So keep that in mind. So there is a chance that we're already breaking down. And the reason I'm kind of somewhat trying to force the bearish case here, it's not because, first of all, I have no position yet here, right? So it's not that I'm trying to talk my book or something. The reason I'm somewhat trying to force a bearish outlook here is, first of all, the way and the manner with which price action has unfolded. And second of all, you'll see why when I go through the rest of the crosses. In any case, if you want to take the red one, we had a false break higher, and we're seeing quite a nice move unfolding to the downside, right? Next area of support is at 158.50. Below that, I think we're undoubtedly bearish because we will have also posted the lower low. Now, if you look at Euro Kiwi, without having to force any type of change in the channel here, we seem to be more or less where we are with the blue version of the channel here, right? Meaning having broken down on Friday, in this case, having already produced a lower low from the previous low, right? And currently testing the 61.8% fib of this whole move higher, right? So possibly breaking down as we speak. Now, if you look at the equivalent pound crosses, here's the pound Aussie. I had this channel. I'm not going to try to redraw it. We had clearly an overthrow with some clear RSI divergence playing out here, and we're now back within the channel, right? Clearly, from all four of them, you'll see that this is the least bearish looking one. Why? Because the pound has been doing, in general, better than the euro for quite some time. And second of all, because the Aussie has been underperforming the Kiwi for some time, which is very obvious if you open the Aussie Kiwi chart. You'll see that it has been in a downtrend for quite some time now. So, that would immediately make obviously the pound Aussie the least bearish of these. Now, if you notice that the pound Kiwi, though, you'll notice a clear breakdown from the channel. Now, if you want to be really granular here, you'll also notice a double top I hate that. There it is. That was triggered there, right? Currently testing a nice confluence of supports, but I do think, look at this. There's nothing impulsive to this move higher, right? So there is a big danger, in my opinion, for a big move lower. So, this is something I wanted to cover as well, and I forgot to do mostly on Friday. Okay, that's all I had to. Hello, Alexander. That's all I had to talk about, having to do with observations of what's happening in the market. And now we can go over and build the bias chart, and then we can look at any questions you might have. So, as I said before, I'd rather use obviously the 4-hour chart if we want to build a bias chart. So here we are. And here is the EURUSD. Now, without any doubt, 119, right? It's also the 38.2 from that move as we've seen on the daily, right? There it is. 119 is resistance here. I have the bias chart open in another screen. I'm going to fill it in, and once I do, I'm going to pull it up so you can see it. But I'm going to be, saying the levels as I put them in. So 119 is clearly resistance here. Now the question is, where would the closest area of support be? Now, the lows of the day today, 118.50 is a soft support area, but it's very, very close. So I'm not going to put that on. It's not that I see something that's like really, really super obvious. We can use this trend line support. Currently passing from 118.25. I think that's our best short-term bet here. So that's support. Now, USD Swiss. So here it is. I haven't readjusted anything on the 4-hour chart, as you see. As you know, my main focus has always been on the daily chart. So first of all, you know that this is, we've been looking at this as a triangle, right? There it is. Let's change the color, to be honest. Okay, so clearly coiling. I mean, you can see there is no trend at the moment, right? Look at the RSI, even on the 4-hour chart. Hasn't gone anywhere near overbought or oversold levels for quite some time. And we're talking about the 4-hour chart. For the 4-hour chart to hit overbought or oversold levels is very, very easy, right? But we can even take shorter term levels within this symmetrical triangle, with support being at 91 cents, obviously, right? So 0.91 and resistance being at 91.90. Perfect. So let's go to the cable. And here it is. Now, we know that there is a channel here, which I already showed you on the daily chart, but let's draw it here as well. Mostly care about resistance, as you understand here, right? Now, if this proves to be a legitimate breakout, we need to see this moving higher from here, right? On the other hand, I don't want to put support, so close. So I'm going to use this area, high, low over there, etc., to give it a little bit more space, which is at 138. And the recent highs obviously have to be resistance, which is at 139. I see I have a question from judging from the name, you have to be Italian, I'm assuming, and that would make you Angelo or Angelo, which was Angelo, Angelo most likely. Very similar names. Angelos is the Greek one. Now let's go. I'm going to address your question once I'm done with the bias chart, by the way. So here's the Aussie. Looking at the bigger channel, which I've drawn here as well, false breakdown, nice impulsive move higher. Yes, yes, Nuli. Previous high, some congestion area here as well at 74.75 is the closest area of resistance, with support being here. 74 cents. And the Kiwi currently testing resistance. I know I haven't drawn this on the 4-hour chart because I use the 4-hour chart for smaller type of formations, but that's no problem. We're going to do it immediately. There we go. So 71.50. With support being this horizontal breakout area at 71 cents. Now, let's have a look at some other commodity currencies. Let's go with the loonie. There it is. Likely a breakdown in the loonie. Here's the trend line support I pay attention to. You can see from how many points it passes through, right? So I think it's a, it's a decently solid one, and I think we can now readjust the fib back to the lows and see if we also have like a fib area nearby. No. Oh, come on. There it is. So let's see. Okay, so next downside target, the 50% fib at 124.78. And resistance being there. 126.40. Nice. Knock. Still trading below the broken rectangle, or otherwise you can call it a double top formation, right? You can see it over there. So clearly resistance is at 871, and as long as we trade below it, this double top is in play. So there is absolutely no reason to be bearish, with 862 providing so far support. I don't think for much longer, most likely, but I guess we're going to find out. Here's USD MXN. Support 1983. Currently, as you see, testing this symmetrical triangles trend line support and looking decently heavy. And first area of resistance has to be at 2002. Let's go to the precious metals since I have them in the same tab. Now, here is the bearish case scenario for gold if you're looking to be bearish. It's this one. Okay. So it's this one. 1833, right? You can see it very, very clearly. We have found a high 3 times there already during the past, in essence, 3 weeks, right? And it's a 50% fib as well. No, it isn't. No, scrap that. Leftover 61.8 is a little bit lower. In any case, I pay more attention to past price action. So 1833 is more important to me than the 61.8% fib. Having to do with support, I would have to say this. We found 2 lows over there at 1802. There it is. Silver. Now, the bearish case scenario for silver looks very much like the bearish case scenario in gold. Right. Would be something like this. Now, that's the bearish case scenario. If this proves to be, in other words, and so far, the rebound higher definitely is, has very, lackluster momentum. So yeah, it's not unlikely. I wouldn't be short, why? There are many, many reasons why, but let's also fib this. Okay. So next area of resistance. It's a good question. I don't see something on the 4-hour chart that really jumps out as amazing. So I'll have to use the 50% fib at 25.34. And support being here, 24.22. Next, Bitcoin. So we've had this recent breakout here in Bitcoin. I'm talking about the short-term chart, right? We had this recent breakout. We had also indicated that on the daily chart, if you remember. We're also seeing a break above the 61.8 and previous little high over there. But we have found so far resistance here in this horizontal support resistance area. So I'm going to have to put that down, 52,250. With support being, first soft support is more or less here, 51,000, but I don't want to put that because it's like a few seconds of a move for, assets like Bitcoin. 49,200 would be my choice in this case. 3 left, and then I'm going to go to questions. It's USD yen, the DXY, and the S&P. So USD yen. Let's readjust the 4-hour chart to match our daily. We can delete this, we can clone this, and we can bring it here. Okay, and we have like a smaller type of formation here in blue. Support 109.55. Resistance 110.40. Still coiling, as you see, as the 10-year yields are doing so. DXY. Resistance back at 90 to 50. And support at 91.80. Those are quite clear on this chart. Keep in mind that, I might be bearish the dollar for multiple reasons, but as I wrote on the end of week analysis as well, the DXY has not yet started breaking down in a manner that, looks clearly impulsive and would make me, very bearish, in the short term, right? So, I forgot to adjust the biases. Yeah, that's very easy though. We can do it. Give me a second and I'll do it. So the Euro USD bias, if we're talking short term now, because this is a short term chart by default, since we're adjusting it on a daily basis, right? In my opinion, it's bullish in the Euro USD. Somebody can say that you can be neutral against the 38.2, but I think since we've broken through the wedge, it's bullish. In my opinion, it's bullish if we're talking very short term in the cable because we're trading just above the channel. Now, of course, you can also turn it to range for one reason only, because as we saw, we have incrementally broken above the channel. So it's not, it's not a slam dunk breakout yet. In the case of the Aussie, in my opinion, the way it's been moving higher is impulsive. Same here, if we're talking short term, same here. USD Swiss in that symmetrical triangle we talked about, clearly range. USD Yen clearly range. DXY, I was just explaining that it hasn't broken down yet, so I'm going to leave it to range. USD MXN in a symmetrical triangle, clearly leaving it to range. USD NOK has broken down from the double top, clearly bearish. Short term, we have seen a breakout both in gold and silver. So short term, in my opinion, you should, view them as bullish. Bitcoin clearly bullish, and having to do with the S&P, you don't ask, you just leave it at bullish forever, and that's all good and well. So bias chart made having to do with the biases. Now let's finish the levels having to do with the S&P. And then I'm going to show you the chart. So S&P in a rectangle, in a short-term rectangle, currently testing resistance. So let's say, okay, I'm talking about the S&P showing the Nasdaq. Doesn't really matter because as you'll see, the reason I didn't even notice until I started looking at the levels is because we're talking about more or less the same short-term pattern here. Here it is, a little rectangle, currently testing resistance. What am I going to put? I mean, okay, 45. Yes, I know we're currently slightly trading above it, but I don't necessarily think that. Okay, we can give it a little bit more space, like 45, 48, let's say. We might not break above it yet, but I do think we're eventually breaking above it. And then the next upside target is, what is it? 45.80, more or less. And support clearly at 45.16. 45.16. And I think the bias chart is done. Let me pull it up for you to see. Let me adjust the size because it's a different resolution screen. Okay, perfect. Let me also take a screenshot so I can post it. There we go. Okay, that's weird. For some reason that didn't work out. Second attempt. Windows don't want to play ball with me at the moment. I have no idea why. I'll do it later. I'm going to leave it open. So that is the bias chart for today. And perhaps it's because Zoom is open. I have no idea if it affects in some way. And Anyhow, I'm going to fix it afterwards. And I'm going to be more than happy to go over questions. Let's see now. Is it possible, in your opinion, that the Friday reaction to NFP might lead to a false break given the unemployment went down, wages went up, yields were up? All these are indicators the Fed is looking at in terms of tapering. That plus the fact that the Fed earlier said that they were possibly moving the tapering date up to 2021. Average job gains over the past 2 months, close to 500,000. The market seems to have focused on one number, i.e. jobs, but that might reverse as everyone rethinks about what just happened. Bull trap, question mark. First of all, I've explained before why I think that the Fed is going to keep moving the goalposts again and again and again. So having to do with my bias, having to do with what the Fed is willing to do, in which direction they're willing to move, I think you would be wise to keep your expectations extremely low. Now, I do believe that for the pretenses, they might still start tapering rather soon, but in a way that's going to make the tapering process almost irrelevant. Do you remember when the previous hiking cycle began under Janet Yellen, that she raised 25 basis points? The first hike was 25 basis points, and if I remember right, it was December, and it took them a whole year to hike another 25 basis points, which most probably, if Trump hadn't been elected, they wouldn't even have done that. And saying by Trump being elected, this is not a political comment. I remind you that when Trump was elected, there was a bout of euphoria in the markets because Trump had promised tax cuts, which is of course bullish for the market, and deregulation, which is also bullish for the market. So I remind you that once Trump got elected, which the market wasn't expecting nor pricing in, we got a massive rally, right? We got a massive rally. And, you know, economic sentiment picked up a lot, and that made the job of the Fed easier to continue with hikes that they hadn't done for a year after the first 25 basis points. So I think, why am I using this example? Because I think that we might see a similar situation having to do with tapering, meaning that we might see the Fed not delay much the first tapering announcement, but I mean, they're currently buying 120 billion per month, combination of MBSs and treasuries. They might like taper like by 20 billion and leave it there for a very decent amount of time, which is going to make an extremely minor difference having to do with monetary policy and how loose it is, right? Especially considering the explosion of inflation, right? Because if you take into consideration inflation, the more inflation picks up, the more loose the monetary policy becomes, even without changing, right? Because it's under different conditions. So monetary policy during the past 6 months, let's say 6-9 months, has continuously moved in the more loose direction without them having to change neither interest rates or quantitative easing, because the other market factors make it more loose, right? In essence, real yields. So keep that in mind. So I think we might see something equivalent happening with tapering. They might not delay the first tapering effort, so they send some kind of a signal, supposedly, that yeah, we're here, and you know, we're not letting things be. But I think it's going to be more for the pretense and, you know, to sow some kind of responsibility, which they haven't shown at all, than anything else. But they're talking about moving up tapering, not delaying. Let me be very clear. I take the Fed and the vast majority of the central banks and what they claim they're going to do not serious at all. I don't care what they're saying, because don't forget, we're talking about the same Fed that if you ask them like a year ago, up to a year ago, if you ask them like, what would you have been doing if inflation was at 5%? And all of them would have answered immediately, inflation will never get to 5% with us in control, because we will never let that happen, right? So I don't really care about what they say. I judge them but by what I see them doing. And what I see them doing is, clearly being irresponsibly dovish. Can you look at Euro Yen? Yes, absolutely. I absolutely can. There you go. Here is your cable. Now, I'm kidding. But kidding aside, you see how similar it is in this case. I mean, we have most likely a corrective channel lower, and we have broken out of this channel just as much as the cable has broken above its channel, right? So, is it enough to register this as a legitimate breakout? Yeah, I guess we would better wait a little bit. But do I think that we are breaking out sooner rather than later? Yes, I do. I've analyzed the vast majority of the yen pairs last week and the week before that. I think that if you notice, the vast majority of them have had clearly corrective moves to the downside. So it makes sense that you should expect the next move to be to the upside. My pleasure, Dennis. Anything else, guys, gals? Any more questions? My pleasure, Angelo. Bye-bye, Alexander. Thank you. Pound yen, sure. You'll notice that it's very, very similar, with one twist here, that we've had the following divergence. This one. As the euro yen was producing a lower low, the pound yen didn't, right? It produced a higher low. But if you notice and focus only on the trend line resistance, we're more or less there as well. Also, keep in mind that the pound yen remains in this well-defined ascending channel. So basically, I also think we had a corrective move here. I also think there is a decent chance that we might be about to end this corrective move and continue higher, if not imminently, rather soon. Right, 153.10, previous highs over there, and the 61.8, I think, is more or less going to be the confirmation level for such a bullish breakout. So we're not there yet, but we're almost there. Almost there. Anything else? My pleasure. Okay, then. I wish you all a wonderful rest of the day, and we'll be back tomorrow with, the full spectrum of webinars and everything else, and chat room participation and intraday analysis, because the market should be back to somewhat of a normal activity. So, see you tomorrow. Steve, did you see my Aussie yet? No, I didn't. Where did you post that? Ah, I see where you posted that. Yeah, sure. I can have a look at the Aussie yen. The Aussie yen has most likely broken out already. Right, there it is. You see? Quite a nice vertical recovery, broken out of this channel, currently testing the 50% fib. I think as long as we trade above this broken channel trend line resistance, you should keep looking higher. Okay, bye-bye. See you again tomorrow.